Non-resident Indians always wonder whether the funds which are standing as a credit in my NRO account can be transferred into either my NRE account or outside of India. Now, there are certain reliefs and concessions which have been announced whereby from the non-resident ordinary account, which is as such a non-repatriable account, funds can be transferred outside of India. Under the Foreign Exchange Management Remittance of Assets Regulations 2016, an amount to the extent of $1 million per person per year can be transferred from a NRO account to an NRE account or from the NRO account outside of India. The requirements are quite simple. The amounts which are supposed to be transferred, taxes have to be paid in respect of whatever they are due in India. Then there is a simple procedure which is supposed to be followed. There are certain specified forms which are supposed to be filled by a chartered accountant, uploaded on the website of income tax, and they have to be given to the bankers. Thereafter, these funds can be transferred. One thing that one needs to be mindful of is that borrowed funds cannot be transferred by way of this kind of a remittance. Moreover, funds which are transferred from another NRO account can also not be transferred. When this remittance is done in installments or parts, then if one installment is done with one authorized dealer or bank, then all the subsequent installments for the transfer in that year needs to be done with the same bank. Now, if somebody says that I need to transfer an amount which is in excess of these limits which have been specified, which is, as I said, $1 million per person per year. But if one wants to transfer an amount in excess of that, then they need to apply to the Reserve Bank of India and seek a specific approval. That approval is available in case if somebody has received any legacy or inheritance and they want to transfer the proceeds of this legacy or inheritance, and it would create a lot of hardship to the person who is intending to transfer these funds if this transfer is not allowed. In those scenarios, this transfer of fund is allowed. Now, let us look at that what are the advantages of availing the benefits under this remittance scheme. So, if I have a deposit in an NRO account, it is liable to taxation in India. But if these very funds are transferred to the NRE account, then these amounts become completely tax-free. Then, as the interest on this account is tax-free, then there is no provision for any TDS or any other kind of taxation formalities which I need to take care of on account of this interest income. Then when these balances become fully repatriable, they can move out of India without any major formalities whenever the rate of exchange is comfortable. And one thing which all the people who are looking at this need to know is that this is a relief provided under the circumstances that India is having a comfortable foreign exchange reserve, and this is not an obligation on part of the government. So if in case, if some time later, if the government says that we are contracting this limit of 1 million US dollars, or we are doing away with this limit of 1 million US dollars completely, then it is within the right of the government. So till the time, and as such this scheme has been operational since 2005, but if in case for some good reason or some bad reason, if this scheme is withdrawn, all the non-resident Indians should try to take benefit of it and at least convert their NRO balances into NRE balances. Now this is in respect of a specific scheme of provided by the Reserve Bank of India. Now, under the Foreign Exchange Management Non-Debt Instrument Rules 2019, under clause 29, if somebody has acquired, if a non-resident Indian has acquired residential properties either from NRE account balances or by way of remittances from outside of India, to the extent of 2 such properties, whatever are the sale considerations which are received on the transfer of those residential properties can be remitted outside of India, which is over and above this 1 million US dollar scheme which I have been discussing. Then the amounts which are current account balances, which are covered under FEMA and defined as current account transactions. Now, just to understand what are current account incomes or current account transactions, are the incomes which are received by way of rent, interest, and income from any business or profession. Those are current incomes and they are called current account transactions. So whatever are the monies which are received even in the NRO account from these current account transactions, they can be remitted outside of India without any limits, and where we don't require that 1 million US dollar limit or any other concession. Those amounts which are, as I said, current incomes can be transferred from the NRO account after payment of appropriate taxes without any limits. So these are the benefits which are available to non-resident Indians in respect of remittances outside of India, or make the money in India from a non-convertible or non-repatriable state to a repatriable state. These are concessions which I strongly urge all the non-resident Indians should know and take the benefit of it.